This is the only DeFi strategy in crypto you should be running. There is really no other system that is going to work better. And no bullshit, no fluff. We're just going to break it down. First off, right here, the foundation of everything is going to be this. The M2 money supply is being inflated like crazy. The money printers are always going to be on. It doesn't matter if you're Republican, Democrat, Independent, Libertarian. It doesn't fucking matter. The universal truth is that the dollar is fucked. It's going to get printed into oblivion forever, and you need to be in whatever lifeboat you can be, whether that is Bitcoin, crypto, gold, buying businesses, buying real estate. You need to be in something, right? If you're like my buddy who just has a bunch of cash under his mattress and I have not been able to convince him, no matter how many percent returns I show him, that he should invest, then you're lost and your savings will get inflated away to where they're not worth anything. And that just comes down to not putting the time in to understand that even though you still have $50,000 saved, it's no longer buying you what $50,000 bought you even just 4 or 5 years ago. Good example is COVID. Every house you want to buy is no longer the price you want to buy it at. So again, the foundations of what I'm about to teach you is right here. And that is that Bitcoin is going to increase in value over time. The main driver, in my opinion, being just liquidity, the M2 money supply, the dollar being inflated. It's not so much that Bitcoin is going to the moon, that the dollar is just getting printed to oblivion and Bitcoin is still one Bitcoin. That is a lot of what I believe, is that it's not that Bitcoin is getting, oh, it's worth so much. It's that it's still just worth a Bitcoin. Its value is still what it is, and the dollar is going down. That's why your houses and stuff go up in value too. So what is your DeFi strategy? For those people that don't know what DeFi is, again, we're running services. We're running crypto services where when people are buying assets, they're buying ETH, buying BRET, buying Doge, buying AVAX, whatever they may be buying, whatever they're buying out there, there is a market for it where they can get it cheaper than an actual exchange like Coinbase. And most of the time, who they're buying through, it ends up being me. They're buying through me. And right now, it looks pretty dismal, but 70% APR, that is still making me $1,500 a month off this portfolio right here, where it is making me 50 bucks a day. I can tell you from personal experience, this looks much closer to $100 a day and about $3,000 a month off this portfolio. And I can just tell you that because I've ran with this portfolio since April specifically and used it to cash flow other positions, stack stable coins, and whatnot. But we're going to break that down. So when it comes to DeFi, what should your strategy be? And again, the foundation is this. Bitcoin, money supply going, and the foundation, again, is going to be the money supply is going crazy, so we don't want to hand over our assets. And that brings me to Aave. The foundation of your portfolio in DeFi should always be your long-term assets, whether that's Bitcoin, Ethereum, Solana, Sui, whatever your assets may be, fuck, even XRP. It's not me, but if it's you, cool, I'll show you how to do it, right? You lend those assets, and sure, it's making 1.7%, but that's not the game I'm trying to play on this right now. I'm lending my assets like my Ethereum long-term, my Bitcoin long-term, that's on other wallets. This one's an Ethereum wallet, okay? And I guess it has some USDC too. But these are being lent out. So I maintain exposure to them. If ETH goes to $7,000, I'm going to have full exposure to this. If ETH goes down to $2,000, I'm going to have full exposure here in this because I still own this Ethereum. It's just being supplied to the lending market. What I then do, I borrow safe marginal amounts against my Bitcoin, my Ethereum, my Solana, and my Sui. And that's about where I stop in terms of market cap because anything lower than that, it's too volatile. I don't want to get liquidated. I'm borrowing against my Bitcoin, my property, the same way you would take out a mortgage against your home and use that to invest in something else. People, the HELOCs and stuff like that, except it's a whole nother thing. I'm not going into that. So this right here, I'm lending ETH in this example, and I'm borrowing USDC. And the beauty is I'm already net positive on my APY, partly in fact that I have 13 grand in USDC lent out right here, earning 6% as well. But even without this here, this is usually was at about a break-even point, if not slightly positive. So that's worth noting too, because this USDC was some stuff I took profit last month. You'll see it's the second, and I haven't moved that and repurposed it yet. So anyways, you take this money you borrow, and this borrowed money at 5-6% a year, you treat that as a business loan. That is your business loan to actually plug into DeFi and play in DeFi. And it's important that you don't take on too much risk. Like, pools like the black hole pools, right? They pay about 1% a day. It's fantastic, but you do not want to use your borrowed capital for those. You would want to use borrowed capital for things more like AVAX to, let's say, Bitcoin, something that's going to be around for a long time. Or maybe even something like ETH to USDC, right? Focused on cash flow and longevity, something to consistently make returns and not lose, more importantly. You don't want to lose this capital. When you start making money, when you're making your $1,500 a month, you can then use that to then open your risky positions like Black Hole that make 1% because it's risk-free and you've preserved your starting capital, which is very, very important. Now, the reason also that this is so important to do it this way is because, let's say ETH USDC, for example. The downside to liquidity pools is that upon a pump, depending on the pool you're in and what the asset pairs really are, you might not make as much on the actual pump, okay, on the pump itself. But it's important to distinct this because most people that say, oh, I would have made more just holding, you still haven't sold shit. So technically, even someone that got cashed out on an ETH USDC pool and they get pushed out of range, one, it took profit for them because they're now holding all USDC. Number two, they were earning $400 a month doing this while they waited. So they actually have made profit. And even if you made money on paper, then stuff like April happens. The last couple of weeks when we dipped happens and you freak out, you panic sell, you lose money. And that's if you even ever sell. Some people, that's what, and then you panic sell at the bottom. And so some people are just never going to win. So now that that's cleared up just a little bit, again, it's important to know that still on that pump though, you will have made more just holding spot ETH on the pump itself. But long-term in these pools, you make consistent cash flow that you can use to buy more of those long-term assets. So when those big moves happen, you are exposed. And then you can take profit, whether out of the pools, like if they hit your cash out point, take it out of the pools, lend it out as USDC, earning 6%, wait for the next dip and retracement. You can use those fees to stack more of your long-term assets, ETH, SUI, Bitcoin, Solana, whatever that may be. But you generate this giant flywheel where you're building your long-term bag, your long-term capital. You're borrowing against them as a business loan, same way you would if you were starting an actual business. And then you actually create your online crypto business right here. You start running your exchange. You pick popular assets, stuff that's not going to go to shit because you don't want your inventory to go become worthless and get stuck holding this shit and write it to zero. Because if it's not worth anything, you can't resell it, right? But it's all liquid. So all these assets here are stuff that I somewhat believe in long-term. I would like to say at least somewhat. Aster's new, it's a gamble, but we have a little position in that as well. And APRs, they do look boring right now, but that's fine with me because that means people that are still watching this video, their dopamine receptors aren't so fucked that 70% looks stupid to them. People that are still watching this video are looking for consistent cash flow to keep making money, which is a good thing. And what's also important to know is that if the market goes sideways and doesn't do anything, you are still making this $1,500 every month. Whereas, like this stuff, this ETH right here, this has been 33,000 for a couple months now, between 30 and 33. It was down to 29 the other day. Let's look at TradingView. I mean, really, since, let's just talk about when it first came up here, really. Beginning of August, I guess, technically. I mean, yeah, beginning of August. So 2 months. Which I'm not saying it feels like forever sometimes, right? Like, oh, 2 months, when's the bull run happening? But, we had this big dip that scared people, but I still had pools just cash flowing. I didn't have to touch this pool right here. It just kept going, 25% wide. But for 2 months, we've been sitting here. So for 2 months, if you aren't running pools and you're holding just Ethereum, you didn't make any money. My Ethereum here didn't make any money. It was up to 33. It was down to 29. It's back to 31. It's not making any money. It's technically down from 2 months ago. But you know what was making money? My DeFi business is making money. I made $3K last month off this portfolio specifically. I'm not even also talking about Solana, SUI pools, all the other wallets I have. This is just the one wallet that I just frequently show, right? $1,500. This one made almost 3K. So you use this to cash flow your lifestyle or to reinvest. You're actually making money for the first time in crypto when a lot of these guys in crypto, even if they're up on paper, they don't actually ever take profit. They round trip, and that's the worst thing you can do. Because even if you take profit too early, like some of this right here, there's 13K just sitting here. I can just leave it there. If I took profit too early, oh, who the fuck cares? This 33K is still going to grow. But if I took profit at a good time and the market retraces like it did earlier this year, then I have more ammunition for April. This was April, guys. I was buying. You guys were finally selling at a loss. You don't want to do that. You want to be stacking profits, stacking fees, stable coins, long-term assets like Bitcoin. And then when the market nukes, you take those stable coins you have on the side, whether they're earning 6% or if you have them on Navi earning 8%, XtraFi 8%, Jupiter about 9% right now, you put these stablecoins to work, keeping your money moving. And when the opportunity presents itself, you can then full port everything you have into the market. And then you do a rinse repeat. And then you'll have like, for example, again, this wallet right here, this was only 10K in April. Now it's 30K. Like $10,000 in a pool wouldn't have generated me $20,000 in the couple months it's been, and this has tripled. But I have tripled this money and been generating cash flow to keep buying into more ETH, more Bitcoin, stacked stablecoins. So when this happens again, when inevitably the market crashes again, I'll have more money to throw in. When inevitably the market pumps again, I have even more money to pull out, more profits to take. And you can just consistently run this business, make cash flow each and every month. And I wish it was showing a better number right now, but it is what it is, guys. And again, I'm glad that that means anyone watching this video right now has normal dopamine levels and a healthy brain, because you are someone that's not going to take on too much risk. You're going to learn correctly, and you're going to keep making money, hopefully for the rest of your life. So guys, if you have any questions, drop a comment down below. Again, click that link in my description. If you want to work one-on-one with me, my community, we have 105 members inside, where I teach you how to make $5,000, $10,000, $15,000 a month off the crypto assets that you already own. There's people in there making as much as $2,000 a day. Again, some of these guys have a lot of capital. Some of these guys have higher risk tolerance than me. My shit's looking very, very low right now, like 12 and 20%. It's usually much better, I promise. But it is what it is. There's guys that most of their portfolio looks like this, where they're making 200 to 400% a year off their positions. And that's just a risk tolerance I'm not willing to take. But that is, again, something I can teach you if you want to be that guy. So again, if you want to work one-on-one with me, click that link in my description. You have nothing to lose and everything to gain. You already have the crypto. Let's learn how to cash flow and build a business off what you already own. If that makes sense to you, again, click the link in my description. If not, YouTube says, watch this video. And boys, I'll see you there.